Alrighty, traders, welcome to our Sunday weekly webinar. I know we haven't had one of these in a few weeks. Markets have been a little sideways, but we have seen some action in the past week or two in the markets here. So we're going to thought this would be a great opportunity to talk about some great opportunities to see in the market this week. So without further ado, let's go ahead and get started. If you guys are tuning in for your first time or listening to the recording, I appreciate you guys taking the time to go ahead and take some time out of your Sunday or Monday, depending on where you are, and actually listen to this. If you guys are just tuning in for your first time, my name is David Schinkel. I am the CEO and founder of Positive Traders. We're going on a year and 2 months of Positive Traders running. So definitely making some nice progress, making some headway into the world of teaching people and giving people some recommendations in Forex. If you guys want to find out some more information about our group, you can visit our website. It's www.positivetraders.us. But looking at the economic calendar for the week, guys, it's pretty light. We do have NFP on Friday, though. Definitely be aware of that. If you guys are new to trading, you aren't sure what NFP is or non-farm payrolls is, do a quick Google search, what is NFP Forex, and you'll get a nice explanation on there. So that's very important. You guys are aware of that. And then that also means we have ADP on Wednesday. So we have our ADP non-farm employment changes on Wednesday as well. So lots of US dollar news this week, lots of things that are going to move the market this week. And then Tuesday, just because I just want to point this out because we are going to be talking about the Australian dollar, a couple Australian dollar crosses. Monday evening, almost Tuesday, Monday evening, we have the RBA, rate statement. Okay, that's the Reserve Bank of Australia, their rate statement. Now, they don't actually have a press release or anything that comes out with that. The governor of Australia does release a statement shortly after the actual rate statement is sent out. So there will be some movement on the Australian dollar. However, if you guys look, that they are forecasted to keep interest rates the same, and that's pretty much a guarantee. It's not going to be a surprise. I don't think that we're going to see a raise, like a hike or a cut. I think they are going to keep interest rates the same. Reading the news, reading the fundamentals, it looks like it's going to be a pretty boring release for the Australian dollar. And I do want to let you guys know that if you guys are not familiar with interest rates of central banks, I'll just break it down very quickly for you. Generally, when they raise interest rates, that's good for that central bank. If they keep interest rates the same, usually that doesn't have a whole lot of effect, but if it does have an effect, it tends to be a more negative effect than a positive effect. And if they cut interest rates, that's actually bad. Okay, so cutting is bad, hiking is good, and keeping it the same is generally bad. All right, so knowing this should give us some confluence to our trades this week, but let's hop right into the markets. I'm not going to be going over every single pair over on the right here. I don't want to bore you guys to death. So I have actually written down a couple pairs in particular that I want to look at and talk to you guys about what I think is a good opportunity this week. All right. So let's go ahead and let's kick it off with the Australian dollar versus the US dollar, okay, AUD USD. Right now, we are at a very, very pivotal level with this pair. We have been quite bullish for some time. This has been a buy market for quite some time. And I do think ultimately, possibly, moving into the next couple months, we could see some more buying pressure on this pair. But just as you guys know with the markets, nothing moves straight up, nothing moves straight down. Markets move in a series of waves, okay? And I think that our wave for a pullback is due on this pair. You guys can pretty much see, if you can't tell, this is the weekly time frame on AUD USD. There should be, if you guys have any sort of experience with resistance or support or trend lines, just by looking at this chart, you should already be able to see that, okay, we see a lot of resistance. Let me get my marker out for you guys. We see a lot of resistance right in this zone, okay? We have this trend line that's coming down. We have this moving average right here. This red line is the 200-day moving average, a very popular, very significant moving average. It means the average price for the past 200. In this instance, this is the, where this is the 200 moving average, and we're on the weekly. So this is the average. Whatever this price is right here at the end of that red line, that is the average price for the past 200 weeks, okay? And so, 200 moving averages, whatever time frame you're on, that's the past 200 of whatever, 200 days, 200 minutes, 200 hours, whatever time frame you're on. But in this case, we're on the weekly. I always like to start on the weekly time frame. If you guys are new to trading, always recommend starting on higher time frames where you can scale down onto the lower time frames, because the higher time frames are going to give you a better opportunity. Now, not only do we have this trend line, but we also have this previous late 2014, early 2015 support and resistance. This whole zone right here is very, very significant. Not to mention last week, we also did reach the 200% extension on this pair. So I do think that this pair has potential to the downside this week, along with the interest rate staying the same for the Australian dollar. That should put a little bit of bearish pressure, a little bit of selling pressure on the Australian dollar. Not to mention, we're actually going to go ahead and look at the dollar index in just a moment, where it does look like the dollar is going to start to see a little bit of a pullback, a little bit of a comeback. And if the dollar continues to strengthen with a weak Australian dollar, that just gives us a lot of conviction to the downside with this pair. Now, we're looking at downside targets. And to be honest, I usually don't like sharing all this type of information, but I'm not going to give you guys the exact parameters of where we entered, where we put our stop loss, where we put our take profit. But in the premium group, we are currently in a sell with the Australian dollar. So we took a sell on this pair. We're in a little bit of profit right now, and our targets are going to be, our first target is right here, 79 level, for obvious reasons, right? You guys can see this very significant previous level of support, this whole structure that we actually broke out of. I believe we're going to come back down in this area, and then we'll see what happens. So first target is 79. Second target is the 100 moving average, as well as previous resistance right around the 78.30 mark. So we're currently short on AUD USD, targeting 79 moving, and then below that 78.30. And if we see a lower pullback, then we're probably going to see come down to the 77.50 area, which if we zoom out a little bit, you guys can see is also previous resistance, which would now act as support if we throw it on the daily. Okay, let's go ahead. Whoa. Just a second, guys. Put it on the weekly. There we go. All right, so zoomed out a little bit. Now you guys can see. So we took a sell up in this area in our premium group. We're currently holding that sell, and we've got 79 right there as our first target, 78.30 as our second target. If it continues to fall, we can expect a bounce on this previous resistance of the weekly, right around 77, between 77.50 and the 77 area. So make sure you guys have this information down, because this is literally free money for you guys. You know, this is everything is pointing to the downside on these pairs. I think that, we have a very good conviction to the downside. Another pair that I don't trade often, but over the weekend, one of my friends was over and we were just kind of looking at the charts, and he trades this pair a lot. And so I pulled it open, and I liked the setup. It was kind of like, it was kind of one of those setups that are like in your face. It's like, wow, this is almost too good not to acknowledge, even though I don't trade this pair that often. So second pair up for the day is AUD JPY, the Australian dollar versus the Japanese yen. This is a very, very, very scrolled out chart. Obviously, you guys can see all the way to the left here is 2010. So I want you guys to understand how significant this level right here is. That basically like the 88 level, how significant this level is for this pair. We've seen multiple times on the weekly time frame, which the higher the time frame and the better the support and resistance, the more precise it is. It's just gives us better conviction all the way around for these trades. So we can obviously see resistance, 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 support, support, resistance. Small little breakout right there. We aren't worried about that. That's where buyers pulled through, but and then more resistance right here. So this is a very, very significant level for this pair. And if we scale in a little bit, you guys can see what is happening right at this level. Boom. Past 2 weeks, what is price done? We've seen a big influx in buyers throughout the beginning and middle of the week, right? But before the end of the week, the sellers come in and they push price back down below this resistance, showing that, wow, sellers are still not giving up this position. They aren't giving up this area. So I believe that there is a lot of downside to this pair as well. I think the Australian dollar all across the board is going to weaken, but a pretty telltale sign. I mean, if you guys are familiar with candlestick formations, this is also a two candlestick formation, also known as a tweezer's top, showing some downside. So, I would almost bet like my left leg that this pair is probably going to fall this week, along with AUD USD. So I really like the way both of them are forming. I'd like to see, this zone, this area break before going short on it. But if you already shorted it last week, you're in profit, awesome. Congrats. But I think that there's definitely a lot of downside. And not to mention also, you guys can see these purple dotted lines and kind of this purple background. So if we actually throw it on the weekly and scale out just one more time so you guys can see what the heck these lines are. So I actually fibbed out from the high of 2013 all the way to the low of 2016. So a multi-year swing right here. And this gives us a couple different retracement levels to be looking at. And what do we see right here? Right in line with the 88 level is our 50% retracement level. So lots of pressure on this pair. Oops, hold on, guys. I accidentally pressed the back button. Oops. Okay. Sorry, guys. I don't know what I clicked, an accidental button. So looking for downside on this pair, where we'd look for targets at, this seems like a pretty significant area. Let me go ahead and mark it out. This seems like a pretty significant target. Obviously, we can see if we were to extend this back a little bit, you can see in this zone right here, kind of the support of this area, resistance of this area, and then also this is going to be our 38.2% retracement level. So it's going to give us a lot of confluence. Also, if we were actually to do an inside fib, let's just delete this for just a second and let's do this. We're probably looking at about the 50% retracement level from the low to the top. Right around there, yeah. You can almost eyeball that. See, that 50% retracement level is right in line with this previous support and then resistance up in this area. So lots of conviction to be shorting this pair. And so that's two free trade ideas that I want you guys to be very aware of this week, very in line with. Now, this isn't necessarily a trade idea, but I just want to show you guys why I'm looking at some potential a pullback on the dollar and some strength ensuing on the dollar. Is if we look at this on the weekly, this is the dollar index, right? If you guys don't trade, if you guys don't use the dollar index in your analysis, as DJ Khaled says, you're playing yourself. You really are. Dollar index is a great indicator, if you will, of what a lot of other pairs are going to do. It almost does the exact opposite of Euro USD. It pretty much follows USD Swiss franc. Not recently because of some Swiss franc news, but overall, this is a good kind of like barometer gauge of where the dollar is going. And I think right now, personally, this is a big seller's market. We're pretty bearish on the dollar index, but I do think that this 93 level is plenty enough resistance, weekly resistance to stop the sellers, to stop this drop. And I do think we're going to pull back up towards somewhere around this area. I think we're going to come back up to the 23.6% retracement level and start to see a little bit of a pullback before we ultimately maybe see the dollar weaken. It really depends on monetary policy. If you guys aren't familiar with U.S. monetary policy, what we have three more interest rate decisions before the end of the year. We've got one on, I believe, September 20th, November 1st, and December 13th. I believe those are the next three. Or maybe it's September 30th and December. No. Yeah, we're good. So September 20th, November 1st, and December 13th. We have three more opportunities for the Federal Reserve to raise interest rates, to hike interest rates in the U.S. And I personally think, just from my opinion and my digging around with the research, I do think that they are going to raise the interest rates at least one more time this year, if not two more times this year. So obviously, what did we talk about in the very beginning? If they raise interest rates, that's generally good for the currency. So I think we'll ultimately see a stronger dollar coming out of 2017 into 2018. But we are at the bottom of this range right now. And so I think that we're going to see a lot of resistance in this area, and we're going to see a pullback up to this area. And that's going to give us some strength in the dollar, which is going to help us with our, things like our AUD USD trade and things like that. Other than that, just some things to kind of look for this week. Euro USD. Obviously, if the dollar starts to strengthen, we're going to see a nice pullback on this pair. We're seeing some multi-year highs, right? We haven't really seen these highs since 2015. The last time price was at this area was early 2015, almost 2014. So price never even went this high in all of 2016, which is pretty crazy if you can wrap your head around that. So I do think that we are going to see a pullback on this pair this week. I think that the dollar overall is going to strengthen throughout the week, and that's what we're going to be looking at. And then USD Swiss franc as well. If you guys don't already have this in your trading journal, that USD Swiss franc and Euro USD have a negative correlation, meaning that if we see USD Swiss franc moving up, we're most likely seeing Euro USD move down. Now, that is not 100% of the time, but that is a majority of the time. And so what does that mean? If we connect all the dots, if we're looking at selling Euro USD, if we're looking at a stronger dollar, if we're looking at selling AUD USD, what direction do you guys think USD Swiss franc should be going then? Probably to the upside, right? If that means dollar strength. We also have just some nice price action from last week. We see this big bearish engulfing candle on the weekly time frame of the USD Swiss franc, just showing some just ultimately the bears on this pair pulling through. So I do think we'll be coming to the upside on this pair, maybe coming back to the underside of this trend line. But Euro USD and USD Swiss franc are definitely two pairs to watch closely and see what happens. But for the most part, guys, that is it. I'm not really interested in anything else right now that's on the board. You know, there's plenty of opportunity within these pairs, and your confirmation also with AUD USD. I know I had a couple people messaging me about compounding the trade. You know, if we're very confident that it could drop, you know, is there an opportunity where we can double up on our trade, right? We take our sell. You know, for instance, if I'll just really quickly outline what I mean by compounding a trade. Meaning, this is what we mean by compounding a trade. If we took a sell, let's say we took a sell in this area, right at this blue line. All right. And we have our target. Let's say we have our target down here. All right. Now, when you compound a trade, you never want to compound a trade that's in a loss, right? You never, if you take a trade and it goes negative 30 pips, you don't want to add on to that trade because you're going to end up blowing your account that way. The only time I ever add on to a trade is when I'm already in profit. Okay, because that allows me to eliminate the risk of the first trade by setting the first original entry to break even and then having a stop loss on the second trade. So at that point, you have two trades that you're in, but only one of them is at risk, if that makes sense. So just really quickly, I don't want to go over too many of you guys' heads with this type of information, but just an example is if we saw a 4-hour candle close down here where it looked like, you know, that the price action looks like it's going to keep falling. Well, the original trade that you sold up here, you set that stop loss to break even. Okay, so now it's a completely, absolutely risk-free trade. There's no way whatsoever you can lose money on that first trade because it is set to break even. It's set to close at $0 profit or what? Well, maybe $5 profit, or, you know, maybe to cover your spread, or however, maybe a pip in profit, you know, whatever you want to set it at. But that is a completely risk-free trade. Now that second entry that you enter, I recommend putting that entry's stop loss to the entry of the first trade. Okay, so if shit hits the fan and it doesn't go in your favor, well, now it's okay because you have one risk-free trade and only one trade at risk. So it's really like you only lost one trade, if that makes sense to you guys. And that's how we compound trades, and that's how you can risk 2% on one trade, risk 1% on one trade, risk a very, very small amount of your account on one trade. But if that trade ends up going in your favor, you walk out with 10% gain, 12% gain, 8% gain, and you only had a 2% risk or a 1% risk. So you're looking at a very high risk to reward, where long term, that's going to reward your account. So just to give you guys an example of compound trading, just to give you guys an idea, Manny says, my best percentage gains are pyramiding and adding 2% risk with floating profit. Exactly. Because ultimately, guys, that's the key to Forex, is compounding your money, compounding your trades, but at the end of the day, keeping your risks low. You can compound your trades. You can add on to your trades with keeping the same risk all across the board, because every time you re-enter a trade, right? Let's just say, for example, guys, let's say our target was down here, right? We were doing a swing trade. You sold right here. Then let's say you took another sell once this area broke. Okay, so this original sell is gonna be in all of this profit. Okay, but once it gets down here, instead of having this trade's stop loss, which may be, you know, let's say your stop loss was originally right here, you're now going to move that stop loss to break even, okay? And this second trade that you put in, you're going to set that stop loss to the entry of the first trade. So that way, if price shoots up, you're only losing this trade because this trade is still break even. Okay. Now you can do that again. Let's say you're doing a swing trade all the way. Let's say you take another sell once price gets to this level. Okay. Now you just bring everything down again. This original trade, you set the stop loss to the entry of the second trade. And the second trade, you set to break even, right? Instead of having the stop loss all the way up here for the second trade, now you bring the stop loss down here. So both stop losses for both of these trades are right here. And then the stop loss for this trade is right here as well. So all three stop losses are right here. But let's do the math, right? So if we have this trade right here that has a stop loss down here when price gets down here, that means that one trade is already in profit. You're already in the positive, even if this trade was to hit the stop loss. Your second trade would be at break even. So that's neutral, right? So you have no loss on that. And if this trade went up to hit break even, or I'm sorry, if this trade, this third entry went up to the stop loss, which is the entry of the second trade, that would be your only loss that you have. So you have one break even trade and one profit and one loss. So what do you end up? You end up walking away pretty much at break even for all three trades. But the key thing to remember is that you had potentially 6% risk out there, but you only had an actual 2% risk, if that makes sense, guys, because you had originally risked 2% on each one, but you're covering your losses as you drop down. So I apologize if this is very, very confusing to you guys and you guys are watching this. Like, I go over this on webinars all the time. So if you guys need some more explanation on compounding, I actually have a whole webinar where I went over this. So it's very important that you guys understand how to compound your trades, because that's the only way you're going to make some serious gains long term. That's the way. That's the way you're going to make money, because you don't want to be trading every single day. You don't want to be taking 5-10 trades a day. Ideally you want to take a couple trades a week, and that's how you can take advantage. If this is all one trade and it goes in your favor, you could be sitting with a 10% gain, 15% gain on one trade, right? And what do we talk about? We aim for 10, 15% in a month. So if that kind of just like blows your guys' mind how one trade can give you 10%, one trade can give you 15% with very, very minimal risk. You don't need to be taking trades every single day or even every single week to be able to hitting your target goal of 10%, 15% a month. So that's my little spiel on compounding. I don't really have anything else to say, honestly, guys. I just went over the two pairs. Be watching AUD USD and AUD JAPY. Gold, I will touch base on gold. Obviously, we took a losing trade on this last week. Okay, so this was in this area. Because I'm very transparent, guys. If we have a loss, I'm not going to hide it from you guys, right? Because losses are imminent, right? But even if you can win 5 out of 10 trades, even if you can only win 50% of the time, you're still going to be a profitable trader long term with the right risk management. So we had lots of confluence to the downside. And I'll be honest, guys, I think that this move Friday was an excuse for a stop hunt. Quite honestly, I do think gold is going to pull back. I wouldn't be surprised if gold pulled all the way back down to the 1242 level within the next week or two with a little bit of a stronger dollar. But right now, we had a losing trade on it. We see better opportunities on other trades. So we'll sit on the sidelines for now. With gold, at least be looking at things like our Australian dollar, US dollar trade and Australian dollar, Japanese yen trade to kind of see what happens. So if any of you guys have any questions, feel free to throw them in the chat room. I don't mind asking any questions, but this will be recorded and uploaded for you guys. That is all I've got. If you guys need some more information, visit our website, positivetraders.us. You can shoot us an email, support@positivetraders.us, or find me on Facebook, Instagram, or Telegram, and send me some messages if you guys have anything. But it doesn't look like anybody has any questions. I really appreciate you guys' time. Keep in mind those targets for Australian dollar, US dollar, and Australian dollar, Japanese yen. And I hope you guys have a wonderful, safe trading week. Keep those risks low and make that money, guys. Have a great week.